Let's see when, not if. Let's see when we get to 3,500. I feel like that's the situation that we're in right now.
Not only has the gold price climbed to above $3,000, it's breached $3,100. We're speaking today on Friday, the 28th of March, and it's at 3084. Gwen Preston, VP Communications of West Red Lake Gold, is here to break down the drivers of this historic bull run. What's next for the gold price, and exciting news coming out of West Red Lake Gold. Congratulations, Gwen, on finally starting the mills and going into production at West Red Lake Gold. We've been talking about this for more than a year, you and I, and it's finally happened. So congratulations. Big news. Let's go over today.
Yeah, no, absolutely. I was at the mine site last week, and it was so exciting to walk into that mill and see the SAG mill turning and the ball mill turning and the leach tanks full and everything loud and doing what it needs to do. It was really exciting. So it's a cool place to be.
The transition from an explorer to a producer is a story in itself. So that's kind of the theme of our conversation around West Red Lake Gold today. But before we talk about that, everyone wants to know why gold has been skyrocketing. The markets are stock markets are down. Just on Friday, the Dow's down 700 points. Bitcoin is down. Just risk assets not doing well. Bonds are doing okay, and gold is just holding steadily. And one wonders why. I guess maybe higher inflation expectations, recession fears, perhaps with the trade wars. The Atlanta Fed GDP Now tracker is projecting negative 2% contraction in GDP next quarter. A lot of forces, but I'll let you answer that.
Yeah, I mean, all of the things that you listed are absolutely key among the forces, right? I mean, today in particular, we saw a hot inflation print, hotter than maybe some either expected or hoped. I don't know which is the more appropriate word there. But inflation, always a driver for gold. But there's so many different forces right now, right? I mean, all of the tariff uncertainty and everything. That GDP Now chart it's kind of a shocking thing to look at. The steepness of the decline in that current GDP estimate that's a bracing chart to look at. And so that's the reality of what all of the current changes, really the tariffs and the deglobalization move, what this could well turn into. And so yes, gold makes a lot of sense in the middle of all that. There's just a lot of uncertainty. There's a lot of concerns about recession. There's a lot of concerns about inflation. In the midst of it all, we're not in a situation, we certainly don't have a president in the United States, where higher rates to fight inflation are likely, especially if we're going into a recession. So that's pretty much a perfect storm for gold. So it's not surprising that it's doing really well. Where it's going from here, oh my gosh. I mean, you and I talked only a few months ago. And I mean, the gold price change in just a few months is not something that we would have expected. I think we talked in January, wasn't it?
Yeah, January 10th was our last interview. People can check out Gwen's last video with me early January. Back then it was at $2,600, $2,700, that kind of range. And we were going back and forth. When's gold going to 3,000? When 3,000 was the kind of the theme du jour at the time. And now we're above 3,000. And now it's like when 3,500, that kind of thing.
And I mean, for someone who's putting a gold mine into production in Canada, we also get the benefit of the weak Canadian dollar relative to the US dollar. So the gold price in Canadian dollars is 4,400. It's just unbelievable. So it's really good time for a Canadian producer to be putting a gold mine into production.
Do you think gold reaching these levels is going to spur new developments, new exploration? And this was the same question I asked you last year when gold just hit $2,000 and then now 50% higher. It's kind of the same narrative. Is more M&A happening? Is more production happening? Is more exploration happening? Just more activity in the space overall?
I think the main answer to that, we will continue to wonder if and when and to what extent we will get more generalist investors rotating into the equities. That's an ongoing question. I think the more tangible development in the space is that the producing gold mining companies have bucket loads of money. It's a very technical term to use, but like honestly, when Shane went down to the Bank of Montreal, the BMO conference in Florida in February, he came back and he said that his biggest takeaway from all of the meetings and sitting in on some presentations was just how much money the major gold mining companies have and are making, and that matters, right? When they have they became much more conservative entities over the last almost 10 years. And so, made their portfolios make more sense, reduced didn't moved away from production for the sake of production and instead moved towards production for the sake of making money. And now they're getting a strong gold environment and they have a lot of money. What they don't have is a lot of future, the pipeline side of things. So it's that conservative mentality really meant that they needed to get to a very strong financial point before forward-looking things could start to play a major role. But I think we've got to be getting there now. Like from the Newmonts all the way down to the single asset producers, they have bucket loads of money. And so what are you going to do with bucket loads of money? If you want to attract more investors to our space, you have to show growth profiles
Yeah.
and or strong dividends. And those are both options when you have bucket loads of money. So I'm really curious to see what decisions come from this financial setup, right? If major gold miners become a significant dividend play in the stock market in general, that works for me. Let's open up the funnel. Let's get more people interested in the gold equity world. I think that would be good. But also if the majors start, whether it's joint ventures or whether it's acquisitions or whether it's doing some of their own more grassroots exploration, I don't know. But I think there will also be an increase in money going into earlier stage projects.
I think some investors may be wondering, Gwen, obviously gold going up is a net positive for miners at all levels. It could perhaps be a double-edged sword. Why would I buy equities, take on more risk when the metal itself has gone up 50% in 1 year, which is no small feat for any asset class, especially something like gold, which has been historically very stable. What is the thesis for buying equities? What are gold miners doing to add value to investors in light of a 50% increase in gold?
Yeah, I mean that's a very good question. And if we knew that the gold price was going to continue to gain at the pace that it's gaining, then you answered your own question, right? Just own gold. I think the answer is really comes from when you look at the drivers. And you and I have chatted about this before, but I really think that the one of the key reasons that the gold price is moving so significantly right now is because instead of the drivers that moved gold over the last 5 years, up until perhaps the last sort of 6 months, which were not Western investors. It was central banks and it was investment buying in emerging markets.
Yes.
Now we're getting gold buying by Western investors. And Western investors, once they get into gold, they don't only buy the metal. Whereas the groups that were buying gold previously, they don't buy equities. They just buy the gold, the metal. The Middle Eastern investors and the Chinese investors and the central banks for sure, they don't play with equities. But the Western investor does. When their mindset turns to gold, their mindset turns equally to gold and gold equities, maybe more so even equities. And I think that freighter is starting to turn right now. And if that is what's happening, if that thesis is correct, then the catch-up play on the equities is the opportunity for gold investors. So that it's all a thesis, right? We're seeing this is all playing out in real time, but that's the opportunity. If Western investors do what they conventionally have done, which is buy equities, then the gap needs to close, and that creates potential for a lot of upside in gold equities that are lagging.
About a year ago, when we spoke about gold, you mentioned that back then in 2024, early 2024, one of the major drivers rather for the gold price run up then was Chinese retail buying. Central bank as well, but central banks are picking up as Chinese retail buying was strong. Is that still a dominant narrative today in 2025?
I haven't seen it as dominant. My understanding is that it's still certainly happening, but it isn't as dominant within the gold space because so many other players have come in. So I think it's still happening, maybe not at quite the frenzied pace that it was a year ago when it was a really standout thing. But I think, yeah, really fundamental to this whole conversation is the drivers that moved gold up steadily over the previous 5 years remain largely in place. The Chinese buying, the Middle Eastern buying, which we see a lot of, the central banks, those drivers remain in place. And what we're layering on top is the Western participation.
If I were to really press you on an outlook for gold, Gwen, what would it be this year? I mean, at this point, would any price surprise you anymore?
No, I mean, hitting 3,100. I mean, it's only March. I mean, no, I don't think anything. 3,500. Sure. Let's see when, not if. Let's see when we get to 3,500. I feel like that's the situation that we're in right now.
Yeah, absolutely. So let's talk about West Red Lake Gold. This starting of the mill has been long planned. Was the timing of this starting of the mill, which happened in the last 2 weeks, I believe, was it Was it coincident with the rise in the gold price above $3,000, or was it scheduled anyway?
I mean, the big picture schedule for West Red Lake Gold, this company came to be 2 years ago when a group of people decided that they wanted to take advantage of a gold market that they saw coming by acquiring an asset that they could quickly move into production as a gold market built. Thankfully, they had a good crystal ball, and that's precisely what has happened. So big picture wise, it was scheduled, shall we say. In terms of the actual, being a little bit more serious about it, I mean, we have been pushing to get this thing going. The big push is we could have started the mill earlier. The mill is a great piece of infrastructure, and we had to do some things to get it ready for restart, but those weren't really critical path items. What was critical path was getting the bulk sample mined and on surface and ready to go into the mill. And so that's been the big push, and we got to the point on schedule to put that bulk sample in. So we started up the mill, we put some low-grade old rock through it to pack it out. Then we started putting in some low-grade material that we had mined in as part of getting to our bulk sample areas. And then we put the first stope through the mill. And those who peruse social media and perhaps follow either West Red Lake or our president and CEO Shane Williams. We put out some images of things happening, of the mill turning, which is so exciting. And Shane even put out a video of gold being poured just the other day, which is the gold from the first stope of the bulk sample. So very exciting to be pouring gold right now. And that will continue for the next few weeks as we process the other 5 stopes of this bulk sample and then get ready to tell everyone how that work went.
What is the objective for production this year? Is there a volume you're targeting?
No, we haven't given guidance on that. Internally, we certainly have a very clear production schedule. The guidance that does exist is let's get the bulk sample processed. Let's do a little pause after that to make sure that everything is ready, which really means to make sure that the mill, if there's a few tweaks that are needed that we recognize during the bulk sample processing, that we absolutely address those before starting it up for consistent operations. And then let's make sure that we have enough stockpile on surface. And enough is like 5 or 6 weeks worth of full-time stockpile feed, because that's what you want to be a well ready mining operation. You want to have that flexibility in hand. So we're going to make sure the stockpile is big enough. And then right in the middle of the year, which is the schedule that we've been speaking to for a long time now, we are going to start consistently putting mineralized material through the mill and then ramp the amount up towards that 800 and during the third quarter. It's right there.
The West Red Lake gold stock popped a bit this week on the news that the mill started. What is the next development or piece of news that investors should be looking out for?
Yeah, so I mean, the results of this bulk sample will be the most important piece of news that West Red Lake Gold has put out since the acquisition of this project, because we bought this project based on the thesis that doing the right work to define where the gold is, all the definition drilling, doing the right engineering and mining it in the appropriate way means that we can do the thing that the prior operator failed to do.
Yeah.
That thing is deliver the expected tons and grade to the mill. So if we say stope 1, stope 2, stope 3 each have this many thousand tons in them at this, and this grade, the bulk sample, independent people are watching us do this. And so if we say that stope 1 has 2,477 tons at 6.8 grams, then we've mined that, we've processed it, and we are going to report exactly how many tons and at what average grade we managed to mine stope 1. And if we can match those things up, that's literally validating the entire investment thesis. That's the reason that we bought this asset, is that we knew that the right approach meant that we could mine it in just simply because the prior operator didn't do some of the necessary work to enable success there. And so, yeah, those results will come out at the end of next month, and it's a really exciting moment.
Yeah, we'll update the audience for sure when those results are out. Again, for the investor who's probably skeptical, I'm always addressing the skeptic here. They're probably wondering, well, the junior explorer is positioned usually, generally speaking, for a takeout, and that's why I'm buying it, for the upside of a merger or an acquisition. Well, West Red Lake Gold is not, following that path, at least for now. Why would I buy a producing small cap or mid cap company when I could buy a Barrick or Newmont, for example? What's the
Yeah.
thesis here?
Very valid question. So I think there's two layers to the thesis when it comes to West Red Lake. The first is that, you mentioned earlier in this conversation that the developer to producer transition is the story of West Red Lake. It absolutely is. We as a company have not been given credit for that transition ahead of time. A lot of times when companies are building mines, as they get close to producing their first gold, the market starts to inch up their value because they're like, okay, they're getting there. Here it comes. We better value them as a producer. We haven't had that reaction because this is a mine that failed only 2.5 years ago. And so we need to demonstrate that we are doing it, not say that we will, but demonstrate that we are doing it. Then we should get that re-rating as we go from being a company that's spending money and trying to achieve a goal to being a company that achieved the goal and is now producing gold. So that's the first step in that process. The second step in that process is that we didn't start West Red Lake Gold Mines to only operate one asset, one, medium-sized gold mine. We have reason to believe that we can turn Madsen, that there's good potential to turn Madsen into a larger operation. And we have stated from the beginning that our goal is to build a mid-tier Canadian gold mining company. And so we are actively looking for what the next step might be in that kind of process. And so in a market where equities have not yet participated much in the gold price, it's a buyer's market out there right now. There's opportunities out there that we're very interested in. And so let's see. No promises, of course. You got to kiss a lot of frogs before you can find a project to buy. But that's always been the vision for West Red Lake Gold, is to grow into a mid-tier producer. And we're really actively pursuing that. So that's the kind of, if we can navigate that to success, then that could be that, that has potential for transformational value change.
Let me ask you hypothetically, suppose the gold price were to fall to $2,000 next month. I'm not saying it's going to happen, but just in this scenario, what would West Red Lake Gold do? Would you postpone your production timetable, or would nothing change?
Nothing would change. No, for one thing, our all-in sustaining cost for each ounce of gold at the Madsen mine is $1,680. We have a lot of confidence in that number because that number is based on real costing, which is to say we did the pre-feasibility study that produced that cost estimate after we'd already been underground operating for a year. So it was all real costs that fed into that all-in sustaining cost estimate. So we're really confident in that all-in sustaining cost. So even at $2,000 gold, we would still make money at the Madsen mine. And also I don't think anybody here believes that if the gold price were to fall to $2,000, that it's likely that it would stay at that level for a long time. Whereas shutting a mine down and restarting it does take a very long time. We've just gone through the process over the last year of staffing up this operation, and it takes a lot of time and effort to find good people to do the jobs that you need them to do. So absolutely, we would carry on. We would still make money, and we believe in the gold market, and we believe that Madsen can operate sustainably within it.
Are you planning to acquire new assets and add other deposits to your portfolio?
We're certainly on the hunt. People say, don't you need to put all of your focus into Madsen? And absolutely. A lot of our focus right now, the vast majority of our focus right now is
Yeah.
going to the Madsen mine. But, we have a VP of corporate development, and his role is to be out there on the hunt. And I mean, I think it's,
Well, how would you allocate, let's say, your resources? Suppose you have, a bucket of cash, however that may be. What percentage of that would be used for the operations and the productions of the Madsen mine, and then what percentage of that would be used for exploration, for example?
yeah, good question. And that's something that is changing over the next few months because once we get this thing turned on with consistent mineralization, then Madsen carries itself. And so the bucket of money is available to deploy to other purposes. Right now, the bucket is entirely going to Madsen, right? Because we're still in the ramp up. We're just starting to produce gold from the bulk sample. There will be a pause and then more gold after that. So right now, the money goes to Madsen, and that's where it should go. But in only a few months, Madsen starts producing instead of needing money. And then We can look at the exploration targets that Will, our VP of exploration, has lined up, some of which are pretty clearly defined and are pretty, one of which is very near term potential mill feed, and some are really exciting discovery potential. Maybe we put some money into those exploration targets. And then we also simultaneously have our corporate development team looking at other opportunities outside of Madsen. So you have to do it all at once. There's never a good time to buy a project, merge a company, get married, have a baby, right? There's never a good time for those things. You have to do them when opportunity presents. And you won't even see the opportunity if you're not looking. So we're constantly making sure that we're looking.
I'm just curious how the valuation metrics of a developer changes once it transitions into a producer. So, as a developer, your valuations are based on the net asset value of the deposits in the ground. That's still applicable, but now pretty soon you'll have free cash flow as well. So, how does the model change?
Yeah, it's an interesting question. So certainly for those for developers, you have to be valued based on your net asset value because you don't have any cash flow against which to
Yeah.
value. One metric for sure, once companies are in production, is to look at multiples of free cash flow. And so something like Newmont is currently trading at 8 times free cash flow, and in that's at the low end of the overall range, historic range for a major gold producer. It's gone from like 6 times free cash flow all the way up to 25 times free cash flow in the heyday of a gold bull market. And of course, in the heydays of those gold bull markets, the free cash flow is also quite a bit higher. So it is very reasonable to look at free cash flow. And, the Madsen mine using a $2,600 gold price in the financial model makes $95 million in free cash flow annually. And so if you put an eightfold, or if you think that we're going into a stronger market, maybe a slightly higher multiple on that free cash flow number, you pretty quickly get to an $800 million, thumb suck for what a company that is producing that kind of free cash flow could potentially be valued at, based on some of those historic numbers or historic metrics.
Right now you're at 185 million market cap,
Yep,
if I'm getting the number right. So
the big
applying an
difference.
8x multiple to free cash flow would imply roughly 800 million, is what you're saying.
Yeah, yeah, for sure.
Okay.
There's a couple different ways that you can come at that approach, because you can also do it as a multiple on the net asset value. There's lots of different ways that you can look at. You can argue that there's good potential for a higher valuation as we successfully turn into a gold producing company.
The inflation risks are rising across all sectors. How is West Red Lake Gold planning to manage potentially higher costs in some areas?
I mean, it all just comes down to conservative budgeting at the end of the day. And so we make sure that we have not very, but we have appropriately conservative budgeting across all of our operations. I don't know if, yeah, there isn't another way to do that.
Yeah.
Yeah.
Finally, Gwen, let's talk about the next 2 to 3 years. So now that you've reached your milestone of producing, what are some longer term objectives or targets that the company would like to meet?
The mine plan that we have for Madsen is a pretty tight thing, which is to say it only looks at the resource that's right at the Madsen deposit. It only looks at parts of that resource because it used a really conservative gold price when it decided which parts of that resource made sense to look at in a mine plan. In fact, it used a gold price of $1,680. So only the very highest grade parts of that resource came over for contention in the mine plan. So one thing is to make the market understand that the opportunity within the initial Madsen mine plan is actually quite a bit bigger, because when you're in an area mining high grade gold, if there's moderate grade gold around it, you mine that as well, and it's almost free to mine because you did all the work of getting there, and it's easier to mine bigger things. So there's a reality of what Madsen actually not will be, but is today, that's stronger than the pre-feasibility study that we put out only a few months ago. So that's one thing. Then there's a deposit that's right next door. Let's see if we can pull that into the mine plan. That's called Fork, and we didn't include that in the mine plan. Pardon my alarm there. Then there's a deposit that we have that's just up the road called Rowan. Let's see if we can pull that into the mine plan. There's lots of opportunities to make Madsen, just as Madsen, a bigger, longer lived, stronger asset than our conservative mine plan laid out. And then while we're doing that, let's also look at what else we might bring into West Red Lake, because single asset companies don't generally last, and they don't last because they either get eaten up by a bigger fish because single asset, if it's a good single asset, it gets taken out. That's fine. If somebody comes at us with a good offer, we are here to work in the best interests of our shareholders. Or single asset operators buy another asset to diversify the risk and just increase the scale of what it is that they're doing. So we're not recreating the wheel here. We're going down the proven path of what it is to grow a company.
Very good. Well, thank you very much, Gwen. And where can we follow, I guess, developments from West Red Lake Gold?
WestRedLakeGold.com has everything. You can also find us on all the different social medias. And yeah, lots on our YouTube channel as well. We do lots of videos if people like to get their content that way.
Okay, we'll put the links down below, so make sure to check that out. Thank you very much, Gwen. We'll speak again soon. Plenty more updates to inform our audience about later in the year, I'm sure.
Absolutely. Thanks so much, David.
Thank you.